Welcome to the Transparent FX Academy. I'm Nick and I'm a top potter on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a very strong historical structure level, which is currently acting as resistance. In fact, this level was already acting as resistance here, preceding all this rejection to the downside. Again, here, the market tested its zone and started rejecting it to the downside. And we can see how this month we had a quite deep test of this resistance, and we could expect more bearish price action to be developed away from this zone. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, we can see how at the moment the market is trapped in this channel. We can see how we already had three higher highs. The first one was here, the second one was here, and the third one was here, and we already had here two higher lows. Now, in a situation like this usually indicates a deceleration of the market and essentially the bullish side of the market losing its grip with a deceleration. In fact, when you have an impulse and then you start to see a shape like this where you have a channel, at some point you will see a break below the level. In fact, this channel could easily also become a raising wedge. And when you have a raising wedge, essentially you have lower lows and lower highs, which get closer and closer. And then at a certain point, you will see the breakout to the downside. So in a situation like this, we could expect bearish price action to be developed, rejecting the monthly resistance that we have previously identified. Going down on the daily, what do we see? Well, from a daily perspective, first of all, I did speak about gold quite a few times in the past. I spoke about gold when we were here. I explained all the reasons for which from here we could expect this potential rejection to the upside. The market gave us that move. Then from here, I made another breakdown explaining all the reasons for which we could expect first this correction and then the creation of this higher high, which again is what the market gave us. Then we had this impulse. I explained why we wanted to see first the correction and then the higher high before then getting rejected. And again, that is exactly what the market gave us. And by the way, I will link in the description all that previous analysis so you can go and check it out for more free education. Now, in the very last analysis, I explained why this level here was acting and is acting as previous daily resistance, which is now turned support. However, in going and testing this previous resistance turned support, we get a quite sharp rejection to the downside. Now, from here, we could expect a reaction to this support. However, overall, the best probabilities in the market come when all time frames are showing the same direction. Now, in this case, the monthly and weekly time frame are both showing the possibility of more bearish continuation. So on the daily time frame, even though we could see a rejection to the upside, because of the fact that we had such a sharp correction, we have a higher probability that the market will first reject its zone, but then overall break back below the support. Now, that is exactly when gold becomes very interesting. In fact, if and only if we get a break below the support, only at that point the monthly, weekly, and daily would all be aligning in the same direction because this previous support would become resistance here. So if we get a break below the support after a break on the retest of the previous support and resistance, how we could be approaching a potential rejection to the downside. Now, before we speak about that, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds. Now, What we can see is that with the last reports, we went from 195k net positions all the way down to having 185k net positions. We can see how shorts went from the low at 63k to now 67k, but most importantly, longs got massively decreased. We went from 266k all the way down to 253k. So from here, we were seeing only net positions getting increased and gold getting, in fact, stronger. However, now we're starting to see net positions getting decreased, so we could expect gold to start to get weaker. Now, as I said previously, we don't know if the market will manage to break below the support, but if the market breaks below the support, at that point, gold becomes a quite interesting setup, because at that point, this previous support would become resistance. So on the retest of this previous support and resistance, how we could be approaching a potential rejection lower? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames. So for hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here, you will see that at the moment there is a massive promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to one payment of €97. And also, as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the program directly from your student dashboard, and you move your trading there, you can get a full refund credited back into your trading account. And if you scroll over here, you will see that there is still time to join before the offer expires and everything goes back to normal. And directly from here, this is the button to join to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description of this video, and I will see you in my next video. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.